Bismillahirrahmanirrahim. This is the fourth video on incremental analysis. In this video, we will solve exercises on how to determine whether to sell or process joint products. Please like, subscribe and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is a K. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. We also hope that this video helps fresh graduates who want to refresh their learning on how to determine whether to sell or process further joint products. So let us start with solving an exercise on how to determine whether to sell or process further joint products. Stahl Incorporation produces 3 separate products from a common process costing 100,000. Each of the products can be sold at the split off point or can be processed further and then sold for a higher price. Shown below are cost and selling price data for a recent period, and we have the 3 products, product number 10, product 12 and product 14, and let us see what is required. Determine total net income if all products are sold at the split off point. So this is the split off point and the sales are 60,000, 15 and 55, 60,000, 15,000 and 55,000. So the total is 130,000. The joint cost is 100,000. So the net income is 30,000. Then determine total net income if all products are sold after further processing. So in this case now it is they are processed further, and now the sales are 190, 335 and 215. So the total is 440,000. The joint cost will be 100,000 and there is an additional cost to process further 100,000, 30,000 and 150,000. So that gives us 280,000. And the net income now will be 60,000. Then we go to number C. Using incremental analysis, determine which products should be sold at the split off point and which should be processed further. So for this we are going to use the incremental revenue and incremental cost, and the incremental revenue for product number 10 will be the sales value after further processing minus sales value at the split off point, and this will be 190 minus 60, that is 130,000. Sorry, 130,000. Then for product number 12 we have for for product number 12, this is going to be 35,000 minus 15,000, and that is equal to 20,000. And for product number 14, it is 215 minus 55, that is equal to 160,000. Then we are going to look into the incremental cost, and the incremental cost are 100,000, 30,000 and 150,000. We have 100,000, 30,000 and 150,000. So that incremental profit or loss for product number 10 is incremental profit of 30,000. For product number 12, there is an incremental loss here of 10,000. And for product number 14, there is an incremental profit of 10,000. So this was part A, this was part B, and we are on part C now. Now, which product should be sold at the split off point and which one should be processed further? So obviously this product number 12 should be sold at the split off point, while product number 10 and product number 14 should be processed further. Then we go to number D. Determine total net income using the results from C and explain why the net income is different from that determined in B. So the sales okay, we will continue with so now the sales the is because product number A should be processed further, so we are going to take the sales value after processing further, 190,000, and the cost will be 100,000, and the net income will be 10,000. Then for product number 12, it is making a loss if we further process, so it should be sold at the split off point, and the sales value for product B is 15,000. There will be no additional cost in this case. Then we move on to product number 14, and this is making a profit of 10,000, so we will process further, so that is 215,000, and the additional cost will be 150,000. So the net income here will be 15,000, and here the net income will be 215, that is going to be 75,000, 5,000, 65,000. Yes. So the sales, the total sales is 420,000. The joint cost will be the same, that is 100,000, and the additional cost will be the additional cost will be 100 plus 150, that is 250,000. So the net income now will be 250, and this is going to be 70,000. So we can see that the net income is 10,000 more when we go for number D in our solution, and this 10,000 excess is because product number 12 is not processed further, and this is increasing the profit by 10,000. Okay. Next, let us solve one more exercise on how to determine whether to sell or process further joint products. Chain Minerals processes materials extracted from mines. The most common raw material that it processes results in three joint products: Larco, Marco, and Narco. Each of these products can be sold as is, or each can be processed further and sold for a higher price. The company incurs a joint cost of 180,000 to process one batch of the raw material that produces the three joint products. The following cost and sales information is available for one batch of each product. So we have to determine whether each of the three joint products should be sold as is or processed further. And to determine whether each of the three joint products should be sold as is or processed further, we must determine the incremental profit or loss that would be earned by each. So let the incremental revenue for Larco will be 300,000 minus 200,000, that is equal to 100,000. And the incremental cost is 110,000. So there is an incremental loss of 10,000 if we process further. For Marco, the incremental revenue is 400,000 minus 300,000, that gives us 100,000. And the incremental cost is 85,000. So the incremental, here we have an incremental profit of 15,000. For Narco, the third product, the sales is 800 after processing further, and at the split off it is 405. So the incremental revenue is 800 minus 405, that makes 395,000. And the incremental cost is 250,000. So that gives us a net income or incremental income of 145,000. So, and I would also like to add that the allocated joint cost are irrelevant to the decision, since these costs will not change whether or not the products are sold as is or processed further. So from the analysis we can see that Marco and Narco should be processed further because the incremental revenue exceeds the incremental cost, but Larco should be sold without further processing, as there will be an incremental loss of 10,000. Next, let us explain how to use incremental analysis concerning elimination of division. Now, Sutton Industrial Products is a diversified industrial cleaner processing company. The company's Verde plant produces two products, a table cleaner and a floor cleaner, from a common set of chemical inputs, CDG. Each week, 900,000 ounces of chemical input are processed at a cost of 210,000 into 600 ounces of floor cleaner and 300,000 ounces of table cleaner. The floor cleaner has no market value until it is converted into a floor shine into a polish with the trade name floor shine. The additional processing cost for this conversion amount to 240,000. Floor Shine sells as 20 per 30 ounce bottle. The table cleaner can be sold for 18 per 25 ounce bottle. However, the table cleaner can be converted into two other products by adding 300,000 ounces of another compound TCP to the 300,000 ounces of table cleaner. The joint process will yield 300,000 ounces each of table stain remover and table polish as such. The additional processing cost for this process amount to 100,000. Both table products can be sold for 14 per 25 ounce bottle. The company decided not to process the table cleaner into TSR and TP. TSR is table stain remover and TP is table polish. On the following analysis, we have the information over here. If table cleaner is not processed further, it is allocated one third of the 210,000 of CDG cost, which is equal to one third of the total physical product. If table cleaner is processed further, total physical output is 1,200,000. TSR and TP combined account for 50% of the total physical output and are each allocated 25% of the CDG cost. Okay. So we start with the sales, and the what is required here is determine if management made the correct decision to not process the table cleaner further by doing the following. Number one, calculate the company's total weekly gross profit assuming the table cleaner is not processed further. So we go to part 1, and first of all we have the sales, and the sales in our so the sales is for 600,000, and we can see that uh, each bottle has 30 ounce bottle, so 600,000 divided by 30, this will give us the total number of bottles, that will be 20,000 times the selling price per bottle, that is 20 times 20, so this is equal to 400,000. For table cleaner, they are and 300 ounces of table cleaner, so we have 300,000, and again it is going to be each bottle is 30 ounces at the rate of and the table cleaner will be sold for 18 per 25,000 so ounces, so we have 300,000 divided by 25, and this will be multiplied by times 18, so this is equal to times this is equal to 216,000, and the total revenue will be 616,000. Now the cost, we have the CDG cost and that is for 210,000, and there is additional processing cost for the conversion of 240,000. So the total cost is 450,000 and the gross profit will be 166,000. So this is part A we have done, and we go to part 2 now. Calculate the company's total weekly gross profit assuming that the cleaner is processed. Before we have assumed it is not processed, but now they are going to process. So again we have the same information. We have first of all the floor shine, and the floor shine is going to be the same, that is 600 ounces. 600 ounces, and we can see that the floor shine is going to sell at 20 per bottle for 30 ounces of um, 30 ounces of bottle. So we have 600,000 divided by the 30 ounces per bottle, and this will be multiplied by the selling price per bottle, that is 20. So this is equal to 400,000. Then we have the table stainer remover, and the table stainer remover for, if you can see here, table cleaner can be converted into two other products by adding 300 ounces of another product TCP to the 300 ounces of table cleaner. So this joint process will yield 300 ounces each of table stainer remover and table polish. So we have 300,000 for table stainer. The additional processing costing for this process amount to 100,000. We will look into it, and both table products can be sold for 14 per bottle and 25 ounce per bottle. So this will be divided by 25 ounces to get the number of bottles, multiplied by the selling price, that is 14. So this is equal to 168,000, and for table polish also we have the same value as it is the same numbers. So this gives us the total revenue of 736,000. Then we look at the cost. So the cost will be the same as it was before with some addition. First of all, there is a cost of 210,000. Then there is an additional cost of 240,000, and if we process further, you see there is an additional processing cost of 100,000 because we are processing further. So the total cost is 550,000, and the gross profit now will be the total revenue minus total cost, that is 186,000. So we can see that if the table cleaner is processed further, the gross profit is 186, and if we don't process, it will be 166. So if we process further, the overall company's profit will increase by how much? By 20,000. 186 minus 166. So therefore they have said here, they say they have decided not to process, so they have made a wrong decision by choosing to not process the table cleaner. So we move on now to number 3. Compare the resulting net income and comment on management decision, and this will be on the next slide. Okay. So when we have to compare the resulting net incomes and comment on management decisions, we have to look into the So that is what we already made the comment, that they have made a wrong decision. And we move on to number B now. Using incremental analysis, determine if the table cleaner should be processed further. And for this, we are going to look into the incremental revenues and incremental cost. And that will be both if we don't process it and if we process it further. So the incremental revenue, if we don't process, is going to be 216,000, and there will be no incremental cost in this case because we are not processing further. So this will be equal to 216,000. If we process further, then we have the incremental revenue of 168 and 168. That will make 336,000. The incremental cost is 100,000. So this will be minus 100,000. So this will be equal to 236,000. So if we process further, our net income will increase by 120,000 and our cost will also increase by, the incremental cost will be 100,000, and you can see that there is a profit of 20,000. Next, let us solve an exercise on how to make incremental analysis concerning elimination of division. Okay. Now, Ohio Household Product Company (OHPC) is a diversified household cleaner processing company. The company's Mishawaka plant produces two products: an appliance cleaner and general purpose cleaner from a common set of chemical inputs. Each week 1 million ounces of chemical input are processed at a cost of 200,000 into 750 ounces of appliance cleaner and 250 ounces of general purpose cleaner. The appliance cleaner has no market value until it is converted into a polish with the trade name Shine Bright. The additional processing costs for this conversion amount to 300,000. Shine Bright sells at 15 per 25 ounce bottle. The general purpose cleaner can be sold for 20 per dollar 20 ounce bottle. Each bottle will have 20 ounce of this material. However, the general purpose cleaner can be converted into two other products by adding 250,000 ounces of another compound to the 250 ounces of general purpose cleaner. This joint process will yield 250,000 ounces of each of premium cleaner and premium stain remover. The additional processing costs for this process amount to 140,000. Both premium products can be sold for 16 per 20 ounce bottle. The company decides not to process further the general purpose cleaner into premium cleaner and premium stain remover based on the following analysis. Then if general purpose cleaner is not processed, it is allocated 1/4 now of the 200,000 of NPR cost, which is equal to 1/4 of the total physical output. If general purpose cleaner is processed further, total physical output is 1,250,000 ounces. Premium cleaner and premium stain remover combined account for 40% of the total output and are each allocated 20% of the NPR. Okay. So let us see what is the requirement in this exercise. Determine if management made the correct decision to not process the general purpose cleaner further by doing the following. Number one, calculate the company's total weekly gross profit, assuming the general purpose cleaner is not processed further. So this is number one. So if it is not processed further, the products are going to be as follows. We have the production of 750,000 divided by how much? Divided by 25-ounce bottle. This will give us the number of bottles, that is 30,000, and multiplied by the selling price per unit, that is 15. So this will give us 450,000. The general purpose cleaner is 250,000 ounces. This is the quantity divided by is going to be sold at 20. The general purpose cleaner can be sold at 20 per bottle, 20 ounce per bottle. So we will divide this by 20 and we will multiply also by 20 because they are the same. So this will be equal to 250,000 and the total revenue will be 700,000. Next we look into the cost. The cost is 200,000 and there is an additional cost for Shine Bright, and that is the additional cost for this conversion amount to 300,000. So that is equal to 500,000, the total cost, and the gross profit will be 200,000. Total revenue minus total cost. So we have done part 1 and we look into part 2. Calculate the company's total weekly gross profit, assuming that general purpose cleaner is processed further. Now here we are processing further. So first of all, again this is part 2 and we have the sales, and the sales is 750,000 ounces and it was 25-ounce bottle and it was selling at the rate of $15. So this is 750,000 divided by 25 multiplied by 15, and this will give us 450,000. Then for the we are processing further, we will be having premium cleaner, and premium cleaner is this will yield 250 ounces of premium cleaner. So we have 250,000 ounces divided by they are going to sell at 16 at 20 ounce in per bottle. So we'll divide by 20 ounce to get the number of bottles, and then we are going to multiply by the selling price per bottle, that is 16. So that makes 200,000. And it will be the same for the premium stainer as well, because they say there is no change as far as they have the same numbers. The joint process will yield 250,000 ounces each of premium cleaner, and both premium products can be sold for 16 and 20, so that is 200,000 over here, and the total revenue will be 850,000. The cost are going to be 200,000, that is already there, NPR 200,000. The additional cost for the Shine Bright, you can see the additional processing cost for the Shine Bright was 300,000. And then there is further processing. The additional processing cost for this process amount to 140,000. So we have 140,000, and the total cost will be 640,000, and the gross profit will be total revenue minus total cost, that is 210,000. So if we process further, our profit is 210,000, and if we don't process, it is 200,000. So compare the, we move on. So this is number 2 we have done, and we move on to number 3. Compare the resulting net incomes and comment on management decision. So we can see that if they have decided not to process the general purpose cleaner, but this is a wrong decision on their side, because the company profit could increase by 10,000. We have 200,000 before processing, and it is 210,000. So they could increase their profit by 10,000 if they process further. So the management made the wrong decision by choosing not to process further the product. Okay, then we move on to number B, and we'll be looking into number B on the next slide. Using incremental analysis, determine if the general purpose cleaner should be processed further. So again, for this we are going to use the incremental analysis, and we can see that the incremental revenue was 250,000. If we don't process further, so that will be 250,000, and there will be no incremental cost, and the net effect is positive 250,000. If we process further, then the incremental revenue will be 200 plus 200, that is 400,000. And there will be an incremental cost of 140,000. So this will give us a positive 260,000. So if we process further, the incremental revenue will be 150,000 more. Our net income will increase by 150. The cost will be 140, and this will give us the net effect or increase in our net income for 10,000. That is what we have done over here. We have shown it over here as well. So the decision should be made by comparing the incremental revenue and incremental cost, and we can see that they should have processed it further. So this completes the 4th video on incremental analysis, where we learned how to determine whether to sell or process further joint products. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah I will reply you back. Thank you so much and happy learning.